Hey guys, John.Hunter, your mortgage hunter, coming back again with another weekly rate update. This one for Friday, September 13th. So, with the Fed poised to cut rates, ending the second longest rate hiking cycle ever, it really comes down to basically two things that the market's going to be watching going forward, and that is employment and unemployment. So, this week rates are down slightly. The trend continues, thankfully. 30-year fix is about 5.625 to about 6.5. 15-year fix 5.375 to 6.25. FHA 5.625 to about 6.75. VA 5.625 to about 6.5. Down payment assistance for about 5.875 to about 7.125. Now remember, guys, these rates are based on loan amount, loan type, loan purpose, property type, whether you're a first-time home buyer, what your income level is. There's just a lot of factors that go into these rates. So that's why I give ranges. Sometimes they're even a little bit outside of these ranges, but for the most part, this gives you an idea. The trend week over week is down, and that's what we're all looking for. Now, the Fed is supposed to cut rates this next week. The meeting is on Tuesday. They come out with their announcement on the 18th, which is Wednesday. And really, the market is looking for minimum of a 0.25%. The bets are, I think, are a little bit better than 50-50, that it's going to be a 50% or 50 basis point cut, 0.5%. A lot of people, I think, have that priced in. Now, this is where it gets kind of interesting, guys. And this happens when rates are going up and when rates are going down. Anytime there's more than a 0.25%, it's all about what the market expects, right? So if the Fed only cuts rates a 0.25%, we could see a temporary spike upwards in rates because it's deviating from what they expect. But there's also this train of thought that if the market really wants a half and the Fed only cuts a 0.25%, we actually could see a rally in rates and have it drop more, because the market could think that the Fed is totally messing up. They're going to screw the economy, and rates are going to get worse faster because the Fed's not acting aggressively enough. You see the dilemma there? And it really kind of depends on the mood. The market is a finicky thing, right? It's an emotional beast at times. And with Fed rate cuts, sometimes it really depends on how they interpret what the Fed says, not just what they do. So like I tell people, when the Fed makes a move and it does what the market expects, the cut is a non-event, right? It's what they say projecting out. If it changes, will it drive the market? And that's what they're going to be looking for here. But, going forward, like I said, the two driving factors going to drive the Fed's decision, and really drive not even the Fed so much, but just driving how fast rates come down, is going to be employment. Now, this kind of goes into what I've talked about the last couple of weeks. The numbers we've been getting are absolutely baked, and they're fake. And even the Fed, not the Fed, but the Bureau of Labor Statistics, who are providing these numbers, has been admitting it recently, right? They decreased their numbers by 800,000 jobs within the last year, and 12 or 13 of the last employment data that's come out monthly have all been revised downward. Why would we trust any of the numbers that are coming out right now? And the numbers are actually weaker than expected recently, but they're going to get revised down just like the others. I mean, just like I was taught a long time ago, when you see a pattern occurring, you must assume that pattern is going to continue until you have something that shows you that it's going to stop, right? So why would we believe that the pattern of over-reporting employment numbers is going to change? It hasn't changed in well over a year. I think it's been a pattern with this administration more than most, but it's not normal to be reducing consistently large numbers like they have. I don't know what they have to gain from it, but it kind of just surprises me that the market isn't baking that in to their predictions with rates. So, I do believe that we're going to get some bad economic news. It's going to continue into the fall. That bad economic news is going to drive rates down. So, I think that's really going to be a good thing here. Lies never survive the light of day. And I think the lies about the employment market and where we're at as far as the economy in general will shake out by the time the election's over, if not very shortly thereafter. So stay tuned. It's going to be interesting. So next week, the Fed his meeting. It's a big meeting. It's going to be all over the news. You're not going to be able to avoid it. Right? It's going to be out there. So if you have any questions on it, and tune in next week. I'm hoping to have a thorough update for you guys and to give you the direction, which hopefully is all down. Anyway, like, subscribe, join me next week, and have a wonderful weekend, and happy lucky Friday the 13th. Talk to you soon. Bye-bye.